Hello friends, this is Ruchira Vaidya and you are watching my CA Final Audit channel, that is for CA Final students for auditing subject. Now friends, in this lecture we will be covering Essay 250, that is consideration of laws and regulations in audit of financial statements. Now let's begin with the objective. Objective of the auditor in this case is to obtain sufficient and appropriate audit evidence regarding compliance with the provisions of those laws and regulations generally recognized to have a direct effect on the determination of material amounts and disclosures in the financial statements. Then the auditor has to perform specified audit procedures to help identify what are the instances of non-compliance with other laws and regulations that may have a material effect on the financial statements. And then the auditor should respond appropriately to those identified or suspected non-compliance with the laws and regulations identified during the audit. Now friends, this was the objective. Now we come to the definition of non-compliance. Now what is the definition of non-compliance? Let's see that. It refers to act of omission or commission by the entity being audited. Either it will be intentional or unintentional, which is contrary to the prevailing laws and regulations. Friends, please note that non-compliance does not include personal misconduct of the employees or management of the entity. So now we know what is non-compliance. It is an act of omission or commission. Either it may be intentional or unintentional, which is contrary and does not match with the prevailing laws and regulations. Now friends, we come to the third point, or the third question rather we can say. What are the roles and responsibilities of the statutory auditor in relation to compliance with the laws and regulations of the entity? Now let's see these points in brief, each of these. Now the first point is understanding the legal and regulatory framework. The auditor should obtain an understanding of the legal and regulatory framework. It means that the auditor should obtain an understanding of the entity and its environment in accordance with the Essay 315. The auditor shall obtain a general understanding of the legal and regulatory framework applicable to the entity and the industry sector in which the entity operates, and also how the entity is complying with that framework. Now the next point is to obtain sufficient and appropriate audit evidence. The auditor shall obtain sufficient and appropriate audit evidence regarding compliance with the provisions of those laws and regulations which are generally recognized to have a direct effect on the determination of material amounts and disclosures in the financial statements. The next point is perform specified audit procedures. The auditor shall perform the following audit procedures to help identify the instances of non-compliance with other laws and regulations that may have a material effect on the financial statements. Means exactly, the auditor shall do inquiry of management and where appropriate those charged with governance as to whether the entity is in compliance with such laws and regulations. And also the auditor shall inspect the correspondence, if any, with the relevant licensing authority or the regulatory authorities. The next point is professional skepticism. As all we know, the auditor should maintain a professional skepticism while conducting the audit. During the audit, the auditor shall remain alert to the possibility that other audit procedures applied may bring instances of non-compliance or suspected non-compliance with laws and regulations that may come to the auditor's attention. Now, the last point is to obtain written representation. The auditor shall request management and where appropriate those charged with governance to obtain written representation that all known instances of non-compliance or suspected non-compliance with the laws and regulations whose effects should be considered where preparing the financial statements have been disclosed to the auditor. Now, these were the roles and responsibilities of the statutory auditor in relation to compliance with the laws and regulations of the entity. Now friends, we come to the audit procedures when non-compliance is identified or suspected. Now what does the auditor should do when he has identified the non-compliance or suspected non-compliance? Let's begin. The auditor should obtain an understanding of the nature of the act and the circumstances in which it has occurred, and also collect sufficient other information to evaluate the possible effect on the financial statement. The possible effect on the financial statement may be the fines, penalties, damages, litigation, threat of parting of asset, enforcement, discontinuation of operations, and litigation. The possible effect may also be there on the going concern as an entity. The entity may not be able to continue as a going concern. Now, whether potential effect requires disclosure, the auditor also needs to see that. Whether potential effect has bearing on true and fair view of the financial statement, this thing also needs to be identified by the auditor. Now friends, we come to the next point, that is reporting of non-compliance. When the auditor has identified the non-compliance, what are his responsibilities? He has the report the non-compliance to the management, to the users of the auditor's report, and to the regulator. Now let's discuss each one of them. The first is reporting to management. First of all, the auditor should report the non-compliance to the management in the following ways. He should report to the audit committee, the board of directors, the senior management, depending upon the nature of non-compliance and level of management involved in the non-compliance, should report it to next higher authority, next higher level than the level which is involved in non-compliance. And if no higher level exists, the auditor should seek the legal advice. Then the auditor should report to the users of the auditor's report of the financial statement, as he is obligatory to report to the users of the auditor's report of the financial statements. If auditor concludes that non-compliance has material effect on the financial statement, the auditor should express qualified opinion or adverse opinion as appropriate. If the auditor was prevented by the entity from getting sufficient audit evidence about non-compliance, he should express a disclaimer of opinion, as there is limitation on the scope of audit. In exceptional cases, the auditor may consider whether withdrawal from the engagement is necessary. And lastly, the auditor should report to the regulatory authority. Unless under the law or regulation, the auditor is obliged, he is in obligation to report the non-compliance to the regulatory authority such as RBI, SEBI, IRDA, that is Insurance Regulatory Development Authority. Okay friends, now let's come to the next very important question, that what are the indications of non-compliance by the entity which the auditor should identify. The indications of non-compliance are as follows. There may be investigations by the regulatory organizations and government departments, or payment of fines or penalties, payments for unspecified services or loans to consultants, related parties, employees, or government employees. There may be payment made to sales commission or agents' fees that appear excessive in relation to those ordinarily paid by the entity or in its industry, or to the services actually received. Then there may be purchasing at prices significantly above or below the market price to benefit some categories of the people. There may be unusual payments in cash, purchases in the form of cashier's checks payable to bearer or transferred to numbered bank accounts. There may be unusual payments towards legal and retainership fees, unusual transactions with companies registered in tax havens, payments for goods or services made other than to the country from which the goods or services originated, payments without proper exchange control documentation. Then there may be unauthorized transactions or improperly recorded transactions, adverse media comment, etc. Now friends, these were all the indications of non-compliance by the entity. Now friends, this is we have done with the essay 250, that is consideration of laws and regulations in audit of financial statements. I hope you have liked this video, and please, if you have liked this video, understood this video nicely, please give a like and a thumbs up, and please subscribe my channel if you like this video. So we will be conducting more videos as soon as possible. Okay, so goodbye friends, have a nice day, take care.